Achieving lifetime day trading performance can be very difficult, but I'm going to give you something right now that will immediately make you better. If you have a playbook, sort of like professional sports, where you have a series of plays that are repeatable and you practice them over and over again so that way you can perfect them. And day trading is exactly the same. Having a playbook or just a small basket of setups that you look for every single day, and when they show up, you know exactly how to execute based off of your practice and based off of your back testing. So that being said, going into this slideshow, we will be learning about how the market moves, why the market moves, and some setups to benefit from this movement. I'm going to go into good detail about the different types of setups and some of the levels that become important whenever those setups show up in the market. So that way, whenever you see it, you know exactly which levels to be watching and some of the behavior that revolves around once price gets to those levels that will help you to find good entries. This slideshow, before I continue on, is down in the description below, same as all of my other videos for you to download for free. It's just a Google Slides that you can download. And make sure you leave a comment on this video to enter into this month's giveaway. Now, there are a ton of different systems out there about how the market moves. They all come back from the early 1900s. That is the source of all trading information. It seems from then on has been from the early 1900s to even the mid 1900s. And all of those systems seem to agree that the market tends to move in threes, and that the market only does three things: they trend, they reverse, they stay inside of trading ranges. They have periods of accumulation, which could also be considered a contraction. So, an expansion would be larger range moves, things like this. The speed would be expansions. And then you have periods of contraction where the market is, getting smaller before expanding to the next leg of a move. And that the market, like I said, only does three things: breakout and pullback and trend, breakout, fail, and reverse. Or just stay inside of a high and low. They kind of get trapped inside of a high and a low and stay inside of a trading range. And that the market is fractal. The market in a higher time frame is executing the exact same behavior as a lower time frame, but the lower time frame is executing that same exact behavior far more frequently. The three things that markets do are consistently and constantly happening over and over again, compared to like a monthly time frame where we might still be inside of one candle. But a daily time frame might have multiple breakouts, or even down on the lower time frames, they're constantly breaking out of ranges and things like that. If you are interested in referencing some of these older technical analysis or the way the market moves, or these other systems and things that will really give you a great understanding of the market in general, I'm not saying that any one of these books is going to make you a better trader, but they are very interesting, and I have definitely picked up a lot of great tips and tricks, and that have helped me finalize my playbook and things like that from a lot of these books, and just a better understanding of the market in general. So Toby Crable, I'm not going to read all these, but short term, this is probably one of the better books that I ever read. Technical analysis, just helping you to understand price patterns, tailored trading technique. If you want to learn about the 3-day cycle, it's a bit of a tough read, but if you read it a few times, it's pretty good. Price action bar by bar. Really good for helping with entries and understanding intraday timeframes, and a few others. Wyckoff method, I think, is very interesting, but a lot of these just describe how the market moves in threes. And then, of course, some more recent trading, other YouTube resources other than my channel, Stacey, Burke Trading, Steve Mauro from Beat the Market Maker, some other really good YouTube channels. Let's step into fractal markets real quick, and I've got a daily chart up here showing a down move. This is fairly recent on, I believe, NASDAQ, where we are in a down leg, right? We had a leg down and a pullback and a second leg down. And this is just describing lower lows and lower highs, okay? And we can see that. We can see that the market has been making lower lows and lower highs. And looking over here on a 5-minute chart, obviously this is a daily chart, so this is over the course of 3 days. This market is in a downtrend, but over here we're making higher highs and higher lows, and that is going to happen. And if you see my little super sophisticated picture over here, this is kind of a description of that. So a higher time frame is in an uptrend, but within these legs of an uptrend, you're going to have a series of breakouts, pullbacks, continuations, failed breakouts, lower lows, lower highs. So now we're in a downtrend, but on a higher time frame, it would just be a pullback. And then you have the continuation patterns to go higher. I promise you, all of these things that I am saying right now are extremely relevant to understanding things. It's all going to make sense here in a few slides. And really, the big takeaway from me showing you that the market is fractal and that the market, moves in these 3 push patterns and things like that is so that you don't start getting analysis paralysis from trying to do top-down analysis. If you start on a higher time frame and say, well, the monthly chart's going up, so that way it's going to be very difficult. Now, there are ways of, maybe looking at a daily chart and just understanding that the overall market is going higher, and that's great. You can do that for sure. But there's even a more simple way of looking at things, and I hope that at the end of this video, you'll see what I'm talking about and that it will benefit you greatly. So a fix to the analysis paralysis problem is going down on a lower time frame and just putting up something like the previous day's high and low and looking for setups, looking for opportunities with the understanding that the market only does 3 things. I'm going to say that again, going down to a lower time frame, something like a 15-minute chart. It could even be an hourly chart for you to do your analysis. It really does not matter. The only thing is I want to be able to see the previous day's high, the previous day's low, and where the market closed in relationship to those levels, because that is going to give me an idea of which of the 3 things is the market currently doing. And do I have a setup or a 3-day or a 2-day or a 4-day or a 5-day opportunity that is built up over time into a template, into a playbook template or an opportunity that I've seen over and over again. And based off of these 3 things that markets do, I know exactly what to look for on the day based off of what has happened. All right, you can look at a market in hindsight and immediately know what should I be looking for the next day. There's a few little things that go along with this. The market is moving from periods of contraction to expansion, back to contraction, back to expansion. Sometimes it'll contract for a couple of days before expanding. The probability of multiple days of expansion in a row are a little bit less than if you have multiple days of contraction in a row. There is a very high probability of an expansion coming soon. So we can use that information to help us. The market only does 3 things: breakout, pullback, and trend. Breakout and reverse and go back to the other side. And we have setups that are associated with that. So what we're doing here is we are slowly putting together a trading system to better understand the why. I am explaining the why of the system right now. As this video continues on, from the very first slide until now, has been relevant information to putting together a playbook. Okay, so in the last one, we saw over the course of multiple days, a breakout, a pullback, and a trend. But the market also breaks out and fails to reverse and then goes to the other side of the range. And we're going to talk about setups that are associated with that. For example, a market that is opened, attempted to make a new low, and then failed to make a new low, and then closed above the previous day's close or the current day's open. That would be something like a first green day. Now, in this case, this was also, not only was this a first green day, but notice that the market opened here and it closed here. So it is more of a narrow range day. In relationship to previous days, the high and the low of the day may have been a bit close. This was a doji day, an indecision day on a daily chart. The open and the close are very close together. So maybe now we're into a period of contraction where the market may be looking to expand. Again, don't overcomplicate things. If that confuses you, just know that when the days get real small, that they might be looking to get real big. And one of the setups that we look for, or that I personally look for, is something called a first green day or a failed breakout low of week, and then they close above the open. And then you look on the next day for a buy low opportunity to go back towards or expand the range of the previous day, either to go back towards the high of the current day or to expand the range of the previous day. Contraction leading to expansion. If you look at a daily chart, okay, you can put up a bar chart. You can put up a chart in general, just with candles or with bars. It doesn't really matter. You can see where the market goes from open, big range, close, to periods of open, small range, close, and then on following days looking for failed breakouts that lead to expansions of a range, again getting small and then expanding now in the opposite direction. This is where the setups are coming from, all right? Principle of contraction and expansion is defined as the market's phenomenon of change from a period of rest to a period of movement back to a period of rest. Again, this is from Toby Crible's book. Fantastic read, something, probably one of the only books that has ever actually made me better. This understanding alone will greatly increase your probability of success. Just understanding what yesterday's close means in relationship to previous days and things like that in order to look for setups. If you are lost at all and you do not understand the previous slides, you need to go back and watch them again. Take notes on things about contraction, expansion, how the market moves in threes. All of those details will help you to build your playbook, or just better understand the one that we're about to go into right now. So what are some signals for building a setup? Some of the types of days, the days that I'm talking about in hindsight, the day has executed, the intraday price action has moved up and down, or the daily candle has closed. What can you look for at that daily candle and say, hey, tomorrow might be a good day because of this? What are the things that you could be looking for? If yesterday or the close of today was an inside day or a narrow range day, if today was a bar that opened, made a high and made a low completely on the inside of the previous day's high and low, an inside bar on a daily chart, you might have an opportunity tomorrow. If that range was also a narrow range day, bonus points. Okay, if it was a very narrow range day. First red or a first green day, a day that attempts to make a new high. It might even make a new high on a daily chart as far as like the bars open and it makes a new high. But on an intraday time frame, you'll just notice that it broke out of a previous day's high or broke out of a previous day's low. And then the day closed back up above the current day's open. Or even yesterday's close. You could have 3 days of breakouts, basically identifying a market that has overextended itself. It's gone for 3 days in one direction, or just in general. The market has closed in breakout. And this could be even the first day. So maybe the market was breaking out to the upside. The very first day that they break down, they break out and close in the opposite direction. That can lead to a fantastic reversal setup. And that is the understanding, again, of the market only does 3 things. Does that mean for sure that it is going to go down? If we've been breaking out up and they break out back, no, absolutely not. In fact, if it doesn't, there's a good chance or a probability of continuation. So let's take a look at some of these types of days. What does an inside day look like? Well, it's a day that is opened, tried to go higher, tried to go lower. It doesn't really matter, okay? But it did not trigger previous day's high or the previous day's low, not even with a wick. That is an inside bar on a daily chart. And in this case, they opened, put in a high, put in a low that were very close together. And the open and the close are very close together. This is a very narrow range day, which could lead to a period of expansion. So over here, if you take a look, this type of day tells me to watch the previous day's high and low. So basically what I'm saying here is that the high, if I could draw a line here, I would. The high of this day and the low of this day are going to be my reference points for the next day. How does price behave once we get to these levels? Which of the 3 market conditions are being executed once we get to those levels? Are we breaking out? Are we pulling back? Are we going to trend? Because if we break out, pull back, and trend, we could be looking at a range expansion of that high and low to the upside or downside, whichever way. If we break out, pull back, and trend, we could be looking at equal distant expansions of a high and a low. If it goes to the high and fails, and there's a breakout and a very quick rip back down into the range, or it goes to the low and there's a very quick breakout back up into the range, could be looking at a failed breakout trade, and we go back towards the other side of the range. Now, I have included this slide because this one was not perfect. It was a first red day that did not follow through on the next day. We didn't trigger the previous day's low. We actually just got an inside day. Okay, we had a day that opened, attempted to go higher, and then closed below the open for that day, as well as the previous day's close, which is great. But there was no follow through on the next day. In fact, they even went back to the high of, what was this, Wednesday? Nope, this would have been Tuesday. So they went back to the high of Tuesday, and then that also failed to go higher. So they made this higher high at the high of the current week, but it failed to go higher. And then on this day, it did trigger. So this is where having, kind of like I said in the intro about having the ability to execute in live time, but also having the knowledge and the ability to adapt to the situation. This day did not follow through. It was an inside day. This day broke out and failed and then made a lower low. So now I can say, okay, well, maybe this first red day wasn't really a great one, but this one definitely has a lot more potential. So I should look for a sell high setup the next day because we have the lower low, and maybe this will be a good day over here. So this is, again, let's just describe what a first red day is. They opened, they attempted to make a new high, and they did make a new high. It broke out, but the breakout failed and closed below the opening price for that day and also yesterday's close, making this a first red day. Now, after a first red day or after a first green day, I want to see a new extreme be formed. I like to see after a first red day, a lower low be put in place. After a first green day, some kind of higher high to be put in place. All right, so important levels after a first red day. I've got all these listed up here. PDH means previous day's high. high of day, low of day, previous day's low. For screen date, looking at the previous day's low, low of day, high of day, previous day's high. And I'm looking for what kind of a condition at those levels. So if I had a first red day that goes back to the previous day's high, I would be looking for it to break out and fail. If we went back to the high of the day, so oh man, I'm stuttering all over the place. Notice how this was the high of the day prior to the session over here. And we went back to the high of the day and the breakout then failed. Good stuff. That's what I like to see. Low of day, confirmed breakout. So in some cases, you will have a first red day and then they will break out of the low of the day, pull back, and then you'll get your trend move, which actually kind of happened over here. Low of day, breakout, pull back, and then follow through. Previous day's low, same exact concept, except sometimes you'll get your consolidation down low. They'll break out and pull back where the previous day's low becomes the top of the box. And that will be the level for me to watch in order for the market to give me follow through. So I'm looking at, again, the high of the day for a failed breakout, the low of the day for a breakout pullback or a confirmed breakout, or the previous day's low for a breakout pullback, again, a confirmed breakout. That's how the levels become relevant. Hey, if you're wondering, man, this is all great. He's looking at a bunch of charts. What do I do to get in? I've got entry slides coming up. All right, don't let me lose you going through all the different playbook opportunities or the different types of days to look for a playbook opportunity. I have entry models at the end of this slideshow and at the end of this video. 3 days of breakouts is another one. Basically identifying a market that has overextended itself. Now, there's a few different scenarios that could be, based off of this. We could be in an up moving market, for example, a market that has been going up for a long period of time. It could be 2 weeks, 3 weeks, 4 weeks, 5 weeks. Sometimes it's very overextended weekly. It's been breaking out for multiple weeks in one direction. And then you get 3 days of breakouts, maybe into the beginning of a new week, like a Monday, Tuesday, Wednesday, or it could be a Tuesday, Wednesday, Thursday. It really doesn't matter. But my big thing with 3 days of breakouts is I don't want to climb in front of a moving train. All right. I don't want to. This is an uptrending market. I don't want to just start going short because I feel like we're up high. I feel like it needs to be removed from my vocabulary. It needs to be, I see that the market has gone for 3 days in one direction and it broke down and started making lower lows and lower highs. That is my setup. I'm going to take this trade. Now, on this particular example, it had gone for 3 days in one direction. And it had actually triggered the previous day's low, which is a lower low on a daily scale, which turns into a 3-day opportunity. Breakout, 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 lower low, and then the pullback. So again, breakout, pullback, 3 pushes to the high, and then going back towards the low of the current day and actually expanding that range. You'll also notice that this day opened, attempted to make a new high. So this was kind of a first red day as well. But I wanted to highlight the fact, at least, that this was a good 3 days of breakouts or 3 days of one side of the market being triggered in before a good reversal opportunity. Again, a recap, I'm looking for a lower low in this case because we've been going up. I have got to see some kind of lower low in order for me to take this trade. So like even over here, I could say, hey, that's 3 days of breakouts. And then the market has broke down intraday or on the day. If this lines up with my session, so a market open, I would be willing to take that because we started making lower lows and lower highs, and then we've confirmed my entry criteria. And then the next day, I would use the close of this day as my signal to be watching on this day, and I would say, okay, well, we've made a lower low over here. My entry criteria is playing out. Let's watch market open to see if it confirms. And then in this case, it does, where you have 3 pushes, a little bit subjective. However, once I get this engulfment in my session, I could very easily say, well, that looks like a stair step 3 to the high. There's my engulfment. I'm going to look to take an entry on this. All right, so for some context, this market had been going higher. We've been breaking out and going higher. It was in an uptrend. And then coming off of the high, we have a day that has closed and breakout to the downside, which could signal a reversal. The market only does 3 things. It breaks out and trends, it breaks out and reverses, or it stays inside of a trading range. So this closed in breakout outside of a previous day's low. I could be looking for a reversal opportunity. I need to project this level across because that's going to be the level that becomes most relevant. The breakout level, the high of the day, in this case, the high of the day, because I'm looking for a trend trade to the downside. Go back to that slide from here we go. All right, same exact thing, depending on direction. If it was a breakout close to the downside, these are my relevant levels. It's a breakout close to the upside. These could be my relevant levels. All right, so same exact entry criteria as all of my trades. I know which levels to be watching, and I understand the timing of what needs to occur. And here are the timings. All right, there's lots of different sessions from different systems and things out there. However, market opens is market open. Okay, now I have used the session times from Stacey Burke Trading, where he uses, this is supposed to be 8 p.m. to 11 p.m. Eastern Time. 8 p.m. to 11 p.m. Eastern Time. That is Asia. London is 2 a.m. to 5 a.m. Eastern. New York is 8 a.m. to 11 a.m. Eastern. All right, I personally trade the New York session, so I want my entry to be around that market open time, 9:30 a.m. Eastern Time. I want there to not be any news on the calendar when I'm looking to take my entry. So if there's news at 10, I have to wait until after 10 and see if it's still set up properly after that news event. The reason for that is because a lot of times the market will go into a period of contraction leading up to a news event. I don't want to be caught trying to go long at the high or getting short down at the low thinking it's a breakout, when in reality it's a trading range and I get caught in both directions. They'll hold you in that range, continue to contract right up until the news, and then it'll explode and go whichever way. I'm looking for, if I have a close, a certain type of day yesterday, and I'm looking at today as a trading opportunity, I want the news to confirm what that trading opportunity was. Let's say that yesterday was a first red day. I have news at 10. After the news, I have a consolidated day. They break out of the low of the day at 10. Big bar, right? They could be breaking out. I would wait for a pullback and some kind of shallow pullback maybe to get in short to confirm or along with that first red day. Now, when the bars are too wide or too long for a 5-minute entry, almost every single time I will go down to a lower time frame. I'll go down to a 1-minute chart and find a better entry. Sometimes even when the bars are normal size on a 5, I still like to go down in the pin hammer and look for a good 1-minute entry. This is probably what most people have been waiting for throughout this entire video. They've been banging on their computer screen saying, hey, Cam, please just go over how you get into the market. Here it is. All right, this is my entry criteria and some of the price action that I like to use in order to enter. All right, I like things like breakout, fake out bars. I like finding small, very small, ascending, descending triangles, double tops, whether it be an extended double top or a shortened double top. I really don't care for equal double tops because I think that a lot of times they tend to be manipulated for a triple top or something like that. I like structure. I have got to have structure in line with the trade that I'm looking to take. If I want to go short because yesterday has told me that I should be looking for a short today, I want to see the market go from a series of higher highs and higher lows to start making lower lows and lower highs. I want my entry to be at or around 9:30, and I want no news on the calendar. So let's take a look over here. Market structure in the correct direction. So this market was making higher highs and higher lows. They made a higher high. So when they made this higher high, this confirmed a swing low. And when they started to pull back, it confirmed that this was a high. So now all of these bars here are on the inside of a high and a low. This is all consolidation. And when we break down and start making lower lows, I need to see a lower high be put in place and a continuation pattern, okay? That could be in the form of a lower high. They could even go back to the high and fail. And then that would have been like a lower low, a higher high failure that goes vertical back down and starts making lower lows and lower highs. Those patterns are very useful, and it's going to depend significantly on the time of the day. Okay, so in this case, this would have been around market open when this happened. So that would have been my confirmation. Hey, this is market open. They made the higher high. They made the lower low. They've attempted to put in a new high and failed. This is a breakout, fake out bar here. They have broken out back up to the upside after the lower low, and it has immediately failed and started to go lower. This is also a breakout, fake out bar. So what I can do is I can put sell stops at the low of this bar and get dragged into the market. And really, like I said, depends on the time of the day. Sometimes I won't do that and I will just wait for my confirmation bar, this breakout, and then I will sell the close of this bar. Or what I prefer to do is put a sell stop one tick below that bar. Sometimes I will, if the bar is a little bit too long or too wide, I will let the next bar form and see kind of what happens. If it goes from a wide range bar to a bit of a more narrow range bar, it could be a doji bar. It could be a bar that pins back up a little bit but still closes down in the lower portion of that bar's range. Something like this, pin hammer, doji bar. All right, I will put a sell stop one tick below that bar and allow the market to drag me in. Or what I can do is I can go on a 1-minute chart and try and find another engulfment to the downside, maybe a little pop up and an engulfment back down, and that will be my entry on the next bar. And this is a very good illustration of that. Same exact entry criteria. I use the exact same entry criteria for every single one of my trades. Lower low, 3 pushes back to the high, chart pattern, engulfment. Higher high, 3 pushes back to the low, chart pattern, engulfment. Time of day, time of day, time of day. And you'll probably, in your next entry, hopefully you hear my annoying voice playing in your head. Lower low, 3 pushes to the high, chart pattern, engulfment, time of day, time of day, time of day. Or the reverse. Higher high, 3 pushes to the low, chart pattern, engulfment, time of day, time of day, time of day. And whenever I get my chart pattern and my engulfment, sometimes that bar is a little too wide. Market has been very volatile lately, and sometimes, or a lot of times, I will wait for the next bar to form. This is a 5-minute chart. My goal when I do that is when I get this pen back up, I go down to the lower time frame, a 1 minute, and I wait for them to put a bar back up and then an engulfing bar back down, and I get in on that engulfing bar back down, and a lot of times that will help with finding no heat entries. All right, very little to no drawdown, and I'll take that entry and I'll even add in 1 tick below that bar at the close of this 5-minute bar and let the market pull me in even more. Maybe I can get in, small in this bar, but 1 tick below this bar, I'll add in some size and allow the market while it's going in my direction to add in. Really like to do that as well. So here's the entry criteria. Again, we're making lower lows in a market that I'm looking to take a short on because of a signal from the previous day. Lower low, 3 pushes back to the high. Now these 3 pushes, a lot of times you'll notice or feel like they're very subjective. Yes, they are. They are very subjective, okay? But you'll start to notice similar patterns. Nice little stair steps. Lower low, they stair step it once. They stair step it twice. They stair step it a 3rd time. And you'll notice that you'll see those patterns at a certain time of day. And that's when it's perfect. 9:30 opens up. Wow, that looks like a lower low and 3 pushes and an engulfment. There's my setup. Once that happens, for take profits, I'd say probably my most frequent take profit is using that consolidation, the lower low, lower high, or higher high, higher low. Using that consolidation from the close to close, from close to close, bodies of the candles, and looking for equal distant expansions of that range. So notice I've got it drawn from here. You would take an equal distance of that range and expand it down. That's also considered a measured move of that consolidation of a rectangle. In this video, you have learned about some different types of closes. You've learned about the market phases. Contraction leads to expansion. And I hope that you go back and you start to study these things on your own charts. And hopefully you find some of these signals and look the next day and say, this could be the day based off of yesterday, and I know exactly how I'm going to behave, exactly how I'm going to perform based off of. We've gone over different types of days. The 3 things that markets do. Market engulfs, completing a pattern. We've basically gone over the entry criteria. Market, whenever it breaks out, it tends to go sideways for 1 or 2 bars. Again, large range bar or market going from a period of expansion into a period of contraction. That even happens down on the 5-minute chart. That's why I use that as market follows through, entry is taken. Like, again, this is a recap of the entire video, but also my entry criteria. I do this for every single entry, every single day, every single trade that I take. I do this exact same thing. I look for these exact same patterns. I look for something that happened yesterday to tell me what to do today, and then I just wait for my entry criteria to play out. Ladies and gentlemen, I hope this video has been useful to you. I put some really good stuff in here, and hopefully you've got some gold nuggets. If you have, hit the like button down below. Leave me a comment and let me know that it was. I will see you all in the next one. I do these videos every Monday, long form content, and a live stream every Wednesday and Friday, 8 a.m. Eastern time. See you in the next one. Bye-bye.